what's going on in Toronto, because all across the board, Ontario markets seem to be doing some pretty interesting stuff.
This month, we saw some big movement. So this September was the lowest number of new listings that we got on the market in a decade, right? And
Wow.
It wasn't by an insignificant amount. We're talking like 1,400 less than the last, and that was 2013. Last year we had 20,000 new listings, right? So we've dropped off quite a bit. So we don't have a lot of supply. That means we don't have a lot hitting the market, but we still had the third highest sales numbers in the last decade.
And there's kind of this rumor, this idea that people are moving out of Toronto, but if we're looking at the numbers, it doesn't actually look like that in terms of the market itself.
That was definitely the case in the pandemic. I think there was this exodus from Toronto.
Yeah.
But I also think that I'm now seeing people flock back into the city. This part will be very interesting to any investors. So rental market update.
What's going on YouTube? It's Lynn Matheson here, aka the Canadian Cottage Girl, and today I'm joined by Ammar, who is actually here in London, Ontario, but we're doing a Toronto market update because that is her bread and butter, and I'm really excited to hear a little bit more about what's going on in Toronto, because all across the board, Ontario markets seem to be doing some pretty interesting stuff, and I also hear you're a chicken nugget enthusiast, so I mean, that's all pretty cool.
Yeah, for sure. Sometimes I'm doing the cauliflower, the buffalo cauliflower stuff now, though, trying to keep it a bit healthier. You know what I mean?
Love that. Love that.
Yeah. But the Toronto market, I feel like the last couple months has been kind of boring a little bit, which I find quite nice. But this month, we saw some big movement, so a little bit more exciting than we've seen in the past couple of months. I think more positivity on the seller side of things than maybe for buyers, but that's okay, buyers. Your time is coming. So yeah, I'm pumped to share the stats with you guys.
Yeah, let's roll with it.
As per usual, let's go through kind of like the month over month and year over year data. So the data that I'm talking about today is from September. We're recording this in October, but obviously we won't receive the October statistics until November. So the interesting thing about this segment of the year is we finished the summer and now we're heading into fall market when we're looking at these numbers, which are two typically drastically different markets. And so what you'll see is across the board, a pretty decent price move from last month to this month. So if we look back over the summer, we saw the bulk of these pull back a little bit in terms of pricing, right? And so it looked like good news for buyers over the summer. It's like, oh, cool, we've seen 2 months of regression for pricing. Unfortunately, September kind of closed the gap there, and we're back for condos, condo towns, and detached prices. We're back at the peak of the market. For semis, we're fairly close to the top, but not quite yet. But we've actually passed the peak of the market, which was earlier this year and between kind of like February and March for most of the segments. So pricing wise, average condo price for Toronto is about $744. Condo towns are now at $837. Last month they were just shy of $800. Semis are back up at $1.3. So we've made like almost $100,000 move in the last month for semis. And then exact same with detached as well. We were at 1.674 and now we're just shy of 1.8. So some big numbers and some big moves in recovery for the for September.
Yeah, absolutely. That difference is wild as well, just to look at like the jump there from even last month. Like that's crazy.
Yeah, we've seen some big moves, and that's why I'm always very adamant with my buyers that you know, I felt that this summer was a very good buying opportunity. There were a lot less people focused on real estate. People were on patios. People were taking the time at the beach. Like, we had been locked up for so long that it was like, don't even let me think about real estate right now. Let me take a break. And then normally what we see is like right after Labor Day, people are like, okay, I took that break. I'm back in the market. And then this is what happens, right? And so, you know, we're on the trend that is favorable for sellers right now, but I'll go through kind of market cycles with you in a second and then show you kind of where the opportunities lie ahead in the short term.
Perfect.
So sales, I mean, these look like big drops in terms of actual sales activity, and like they are, but last year we saw a crazy amount of activity in the freehold market and we didn't see like anything in the condo market. So I think you know, I always think year over year numbers could potentially be a bit skewed, which is why I look at the month over month stuff. But from a pricing change perspective, September 2020 to September 2021, detached are up just shy of 20%. Semis are up about 14. Row houses, which is townhouses, are up about 2.5. Condos are up 8.5%, and then condo townhouses are just shy of 14. So, you know, if you bought in September last year, you're probably doing all right. So important metrics to look at. Months of inventory, we track this every single month. It's been actually relatively flat across the board. There wasn't really any like big moves that were made. But I think kind of this is probably going to be one of the most interesting things for kind of people to pay attention to in the video, and that's pricing trends and new listing trends, because they're going to change. And so what I've highlighted here is where we are in September. And so when we did the last videos, we were down here. So you'll see the market moved up quite a bit for both. This is condos and then this is freeholds. But what you'll see is like we're actually following a fairly traditional trend this year, right? And so if things continue on the same trajectory that they have been, and we follow a similar trend line to what we've seen in more traditional years like 2017, 2018 kind of thing, we can likely expect that things will probably flatten out a little bit over the next couple months. So I don't necessarily think we're going to see that 3 to 7% growth from September to October. Now, we didn't see a lot of new inventory, and I think that's actually our biggest challenge is we don't have a lot of supply right now, but we still do have a good amount of demand. And normally when those things are combined, that does put upward pressure on prices. So to see this flatten out would be typical. If it went up a little bit, I actually wouldn't be overly surprised. I don't think it's going to go gangbusters or anything, but I do think supply demand is a little bit tighter than what it typically is from like a September to an October. The area of opportunity that I think people really need to focus on if you're thinking about buying in the next, we'll say like 4 to 6 months, you might have a little bit of a pocket between November and January. So if you want to make a move and you are very price conscious or price sensitive, then there could be some urgency. If you are someone that cares more about getting the best house and having the most selection, we are likely not going to see that. Like literally every single year for the last 5 years, we just fall off the map, and we are already behind in terms of number of new listings. So I suspect we'll probably see this happen again, and we see it both in freehold and condos. So if we look at where these trend lines tend to meet up, we're probably not going to see the same amount of inventory that we've seen in September until spring market, which is going to be like March, April, May. So if you are looking for a great price, you should maybe have a little bit more urgency. If you're looking for the best possible house, you need to be prepared for like a longer purchase cycle, because historically we're going to see less inventory hit the market. So you need to have that kind of slow and steady approach. You need to somehow keep yourself motivated to make sure that you're looking at listings every day, because there's not going to be that many sexy new listings coming out. But if you find that one amazing listing at the perfect time, you might actually get the best house at the best price.
The golden nugget right there.
Yeah.
The best combination of everything.
There you go.
Yeah, I love this. Just the kind of perspective of seeing year over year and what the trend lines look like. So it is the light blue one there, 2020. So that was our super abnormal year with the COVID pandemic starting.
Yeah, exactly. So
Okay.
when we look at this, this is showing us how many new listings hit the market, right?
Right.
And so we saw a lot, like last year we saw a lot of activity, but I think like going forward here, there's a couple other interesting points that we can kind of bring it back to that trend line. So people kind of wonder, like, what has volume looked like? So this actual green circle here is the last time that we did the video, and this is where we are today, right?
Wow.
So we have seen a pretty drastic uptick in volume from where we were when we recorded the video last, which is interesting. Now, this week was Thanksgiving, so that's why it shows a little bit lower here. I suspect we'll probably kind of like hover in and around here, and then we're gonna likely slow down. So this graph is this year broken down by, like, this is every single week that we've gone through this year so far that's rolled over. Now this is back to 2019 to show you kind of like what cycles look like. So here is September. Typically we will see a bit of an uptick in terms of activity. So like sales activity, this isn't pricing, this is just number of actual sales. It usually goes up, and then you see it like fall off the map for November and December. And then it kind of consolidates in January, and then we're back up for spring market, right? And we saw that again, even last year. I know it was not, you know, a typical year, but from a cycle perspective, here's September, here's October, we drop and then consolidate and we come back. And so I suspect we'll likely see that again here, and then November will probably drop off a little bit. Now, to my earlier point on prices, normally we see that consolidation right now, and then maybe a bit of a pullback in November, and then the beginning of the year is when we're likely going to see some more pressure in the market. So again, that's why I'm like, if you're debating this in the next 6 months, I would actually urge you to have these conversations sooner rather than later, because you might end up paying a higher price unless there's something drastic that happens in the market. Also, just for over and under asking, we are seeing an upward trend of, you know, if we start to see this trend upwards, that typically means that prices are going up because people are paying over asking price. And right now it's about 65% of the time that listings are going over asking. Now, this is to my earlier point. This September was the lowest number of new listings that we got on the market in a decade, right? And It wasn't by an insignificant amount. We're talking like 1,400 less than the last, and that was 2013. So that was a while ago, right? Last year we had 20,000 new listings, right? So we've dropped off quite a bit. So we don't have a lot of supply. That means we don't have a lot hitting the market, but we still had the third highest sales numbers in the last decade. So this is like a measure of demand. This is a measure of supply. Right now we have no supply, and this still shows that we have pretty significant demand. So we had the highest sales to new listing ratio that we've seen in the last decade. Now, 2016, you'll see here, was fairly close at 65%. But if we remove 2016 from the equation, we're almost like 13% above a traditional average kind of year. So the demand in comparison to supply is significantly higher than what we would expect for September. And that's why I said, you know, we usually see that consolidation, but we are seeing a little bit of a tighter supply and demand ratio here. So it wouldn't surprise me to see prices continue to swing upwards a little bit from there. So just really important to assess what's happening here in the short term to determine what could potentially happen with short-term pricing. Now, condo market update. We saw, just over a 3% increase in terms of actual sales that happened in the condo market. Toronto West, which is this purple area, prices were up almost 9% from last month. So they were at the lower end of sixes, and now they're at 665, and we've seen activity drop off by about 7.6%. So not a ton of new listings there. Toronto Central prices are up about 3%. So we are, at 783. We're over 800 now. So we've crossed that threshold. And then Toronto East has been flat for 3 months, but we've seen a ton of activity, like way more than everywhere else. I'm assuming that has to do with the fact that the prices, there's a pretty decent price gap between the next closest price. And so I imagine people are kind of flocking out there just as a result of scooping up the most affordable inventory. But yeah, just for anybody to know, we are nearing 600,000 for this to be affordable. So if you're still in that kind of like 450 to 550K range and you're debating making this move in the next 6 months, you would likely want to contemplate having a conversation sooner rather than later to make sure that we can help you get something, or whatever agent you decide to work with can help you get something and put you on the right track and educate you in terms of what's going on in your specific neighborhood right now. Okay. One thing that also is an indicator of kind of strength in the market is days on market. So we typically see from September, October, basically to spring market, days on market increases. So that will usually be an indicator that there may be less bidding wars. Places are maybe sitting around for a bit longer. Maybe you have a little bit more time on your side to be able to make a decision. When this is very low, this is when we'll see a lot of bidding wars. Places are moving very quickly. So we are seeing the same trend line that we've seen in the past couple of years. This doesn't necessarily mean prices are going to drop. It just gives you an idea of what timing could potentially look like in your sales cycle.
Yeah, definitely appreciate the context here. One of the interesting things that you said there in terms of number of days on market, and even like if we look regionally, certainly now is the time to move on it rather than wait if you do want to get into the market, or if you're price sensitive. I think that those are both important things to recognize. Yeah. But additionally, just looking at like the competition in this market, you mentioned 60 some odd % of the new listings that are going up are being sold. So that is significant in comparison to previous years. So like it's really interesting for the Toronto market. Like what do you think are the main factors, I guess, driving this in Toronto this year in comparison to other years?
I honestly think it's a supply thing. There is this pent up and built up demand in the marketplace, and there are not very many sellers that are hitting the market. So anything that it could be a great option that is marketed very well is having quite a bit of activity on it, to be honest. So I think I think we've had these strength tests, is what I would call them, in the market over the past couple of years. And I was having this conversation earlier today about are we in like this bubble in Toronto, and what could be the catalyst to potentially burst that bubble, right? And in order for this bubble to burst, it's important to put into context that we would have to see a drastic drop in demand, or like demand stagnate, and pile up of inventory. That is what would make this bubble burst. And I think when we look at the supply and demand, we look at those two metrics, most of the policies or intervention that we've seen to help kind of like deflate this bubble, or like take some air out of the bubble, have been on the demand side of things. It's like, how are we going to cool down demand? When really, I actually think the underlying and fundamental issue is supply, and that we should maybe look on like that side of the coin. And because we've focused on the demand side of things. We've had the non-resident speculation tax. We've had the stress test. We've had strength tests in the market, and they certainly have provided like a good short-term solution to pricing, but it seems like let a little bit of air out, and it just, I don't want to say maybe there's a bubble, maybe there's not. I'm just speculating on it. But just for lack of a better term, they let a little bit of air out, and then the pressure just continues to build, and the bubble fills back up, so to say, kind of thing, right? So I think we're focusing very heavily on the demand side of things, when it might be important to say, is the root of the problem supply? And should we actually be focusing our policy and changes more on the supply side of things? Because we have tried. It's not like we had a global pandemic. I don't know what else could affect. I'm like trying to figure out what the catalyst to break or burst this bubble is, but we have had strength tests, and they've worked in the short term for sure. We had the pandemic. Depending on your geography, it could have potentially heated up the market. Maybe it cooled it down, but there really hasn't been any massive catalyst to like rectify this housing issue. And I think we need to look a little bit more on the supply side of things, because I think it's been maybe slightly neglected.
Yeah, absolutely. I think that that's actually a fantastic point. And to the supply issue element of this, I guess, what are some possible solutions there? Like developing new buildings, developing new opportunities for people to get into, but that takes time. That takes permits, that takes building, that takes having the supplies actually to do the project. So it doesn't look like it's changing anytime soon. And there's kind of this rumor, this idea that people are moving out of Toronto. But if we're looking at the numbers, it doesn't actually look like that in terms of the market itself.
That was definitely the case in the pandemic. I think there was this exodus from Toronto.
Yeah.
But I also think that I'm now seeing people flock back into the city because people are craving that like lifestyle, the entertainment. We have been deprived of that. And Toronto offers like very many amazing things from a lifestyle perspective that I think people are really craving getting back into their life right now. So I have had clients that bought in London that are like, okay, we're coming back to Toronto now because we want the concerts and we want the restaurants. And like, we thought that this was the right fit for our lifestyle, and it was the right fit for our pandemic lifestyle. But as we move past this, that's maybe not the lifestyle for them in particular. And some people it's going to be the right fit for, but ultimately Toronto has a lot of great things to offer, and I don't necessarily think it's going anywhere. So yeah, people were leaving, but I'm definitely seeing people come back. I think to your earlier point on supply, there's no short-term fix to this. Clearly, if there was, I think we likely would have figured it out by now. But I do think that there should be more incentives, both on the institutional builders and the mom and pop investors. They should be incentivized to creating more housing stock. Like, for instance, if we talk about the flipper tax, okay? Flippers get a bad name. And this is in any industry, right? Like, there's great people and there's terrible people in every industry. There's great agents, bad agents, good car salesmen, bad car salesmen, good flippers, bad flippers, right? But it's really important to understand that there are actually some really great flippers out there that are taking houses that first-time buyers would not otherwise have any chance of purchasing, because they require such a large amount of rehab that it's way too much of an undertaking for like the average person to do, right? And as a result, they want to make money. That's fine. But they're also creating housing stock for people to purchase in an environment where we actually don't have that much. So is there a way, instead of punishing people, to incentivize them to do this in a way that's actually safe, right? Because I think that's the concern with flippers is, am I getting into some, you're just wanting to make money, and so you have all of these shortcuts, and it's like, hey, is there like actually a good balance here to incentivize people to do this in a very safe way to create supply? I don't know. Like, I wish I had the answer, but I do think that we focus very heavily on the demand side of things, and it's provided short-term relief. I don't know if it's a hybrid model or what it is, but I think we should focus on both sides of the coin and incentivize people to create more supply and maybe do something on the demand side as well, because it's obviously proven somewhat effective. And hopefully then it helps a little bit with, you know, mitigating the rise of these prices. But I keep mulling this over and thinking about this day in and day out, and I can't come to a great, I don't feel like there's a great short-term solution that is effective.
Yeah, I think that that's fair. And I think that these are important conversations to be had and to continue to explore, right? Because when we're just putting, you know, a Band-Aid on a problem, or just really finding the thing that is like the result, but not actually the cause, then we're not going to solve the problem. So if we're actually identifying what the problem is in the first place and then trying to tackle it in some way, I think that is important. And just looking at these trends, like obviously we've gone through a pandemic, like that is something that we need to be contextually aware of, in the fact that last year's numbers were a little bit skewed or a little bit wonky in some months. And even if we look at some of those trend lines that you showed today, like it's not a normal year last year. Now we're seeing things get back to where they were in terms of some of those trend lines, but at the same time, those trend lines are elevated. So we've gotten to a new price point. So we're seeing similar trends year over year, but like we're at a new level now because of what's happened. So it's just very interesting to kind of break down. So I appreciate you giving some more context there and just your thoughts on the matter.
Yeah, no worries. Honestly, I think, you know, right now the solution is like, let's just kick the can down the road and try and like figure it out later kind of thing. And it's like, you know, how much longer can we kick the can down the road? Like, let's find the solution, right?
Absolutely.
So I think this part will be very interesting to any investors. So rental market update. I try with these videos to keep a baseline segment to understand kind of like what's happening in a specific market, because there's so many transactions that happen in Toronto publicly. I know in London, it's very hard to actually pull rental statistics because most of the transactions that happen will be private. And so if we keep the sample size the same, so I always go with CO1 waterfront communities. All of these have balcony and parking. They're over 500 square feet and they're 1 bedroom plus dens. So there were 129 total rentals that occurred in August. There were 97 that occurred in September, so less. But prices, you know, for the last couple months, we actually saw prices go up pretty drastically. They haven't gone up, you know, too significantly. They were at 2365 and now they're at 2397, so about 2400. So final prices are up about 1.3%, and days on market have gone from 14 days on market to 11. So the biggest I guess metric that we're seeing right now in the rental market is vacancy, like timing, right? So we would have expected at the beginning of the year 30 days at least to get a tenant in Toronto. Now we're looking at, you know, if you've got great marketing, you could probably get someone in there in a week, to be very honest. It's not going to be pre-pandemic prices, but we're certainly at a higher price than we were at the beginning of the year. So I did actually I have been tracking this, but Treb only releases the prices quarterly, so it's a bit challenging. So if we look here, this should actually be green, but we're up across the board from Q1 to Q2 for pricing, and this is bachelors, 1 beds, 2 beds, 3 beds. So bachelor apartments are usually like, if that's what you can afford, then that's what you can afford, but it's usually not my top recommendation for a purchase. And I think this speaks the truth. It's trailing on pricing very significantly in comparison to the other ones. So this is Q1, so this is before the pandemic. This is where we're at now, and I've created this based on where we are in comparison to pre-COVID. So we're still like 26% behind where we were pre-pandemic with bachelors. We have a lot of headroom to kind of catch up there. 1 beds are down about 16%, so we're about $1,900 for the average 1 bedroom. And then 2 bedrooms and 3 bedrooms have performed a little bit better. So we're back at $2,637 for 2 bedrooms. Now we're about $2,800 previously. And to be honest, 3 bedrooms performed very well during the pandemic. They were, you can see, like there was actually many months where they continued to go up. So right now we're about 3% behind, but I wouldn't be surprised if that gap closed fairly quickly. And then just to put that in perspective, sorry, my graph's ugly. I'm great at reading them. I'm not great at creating them. So I just try to draw these trend lines to show people like, hey, this is really how far away we are in comparison to the beginning. So you can see we get closer to that trend line as we add more bedrooms here. And hopefully that puts things into perspective for kind of where we're at with the rentals. We still have a little bit of headroom for 1 bedroom and bachelors, but I wouldn't be surprised to see these two close the gap over the next couple months if things stay on the same trend. Yeah, so we'll see how that goes. And then just to kind of always finish off with a little bit of help for the average viewer is I wanted to say, like, how do you win in the winter market? Because that's what we're about to head into. So for buyers, it's taking a slow and steady approach from now until the end of the year. You're likely going to have less competition, but you are going to have less listings to choose from historically. Time is going to be on your side for 60 days, and then historically it works against you. So I'll explain myself in that regard. We often see in January a buildup of pressure in the market as a result of 2 things. So FOMO from buyers that did not buy this year. So we have buyers that we've onboarded, let's say in September, or we're onboarding in October, that will be actively looking for the end of the year that will not buy. Okay. As soon as January 1st turns over, they're going to say, I need to do this before spring market because that's historically when the highest prices occur, right? So there is this FOMO and pressure from 2020 buyer or 2021 buyers that are going into 2022. We are also going to have what I call like the resolution, the New Year's resolution buyers. And that's people over, you know, the course of, you know, Christmas to New Year's that go, my resolution is to buy a house this year. And they're going to enter the market in January. So we have very motivated people that think that they missed the mark. An enhanced number of buyers that enter the market at the beginning of the year, some of which will be real, some of which are not real at all. It's the gym thing, you know, some people stick with the gym and many people fall off the gym at the end of, you know, January. We'll say for real estate, maybe it's closer to spring market and then they get defeated because it starts to go crazy kind of thing. Right. So we have some intense motivation and then some potential real and some potential artificial additional pressure in the market in January. That's why we usually see prices go up. Right. And so that's why I said for buyers, take a slow and steady approach, find the right thing for the next 60 days, but don't be surprised if second week of January, time starts working against you and you end up paying a little bit of a higher price or you feel rushed. You will feel rushed because you are going to be looking when prices are more desirable, and then you're going to feel like you missed the mark and you're going to be the buyers at the beginning of the year that I was just talking about. And then on the seller side of things, you need to have great marketing. You are going to have less competition, as we've just saw. So it's actually not a terrible time to list because you're likely not going to have any neighbors that will also be on the market when you do. However, you have to absolutely give it your best go from a marketing perspective because it is historically a time where buyers want to get a deal. And so if you don't give it a good at bat, you're likely going to attract lowballers that are going to come to your property because they're going to think your listing isn't great and you're on the market at what would typically not be a great season for sellers. You must have some motivation. I should bring in a low price. However, if you have the best listing on the market, you're going to be an anomaly because there aren't going to be many great listings on the market. So you could actually, from a ratio perspective, be in a great position because you're still going to have a decent number of buyers and you might be the only person on the market. The key component is to make sure that you knock it out of the park and that you are the best one on the market. So that is how to win in the upcoming months. And then we will have another discussion at the beginning of the year as to how to win heading into the year.
Love that. Yeah, I think that these little tidbits are awesome. And I can see literally the prototype of people that you're talking about how they come to those conclusions. And I do really like the slow and steady approach that you recommend here in the next 60 days. And something to note is like, make sure that you're taking your time, but also aware of that timeline, because we have January 1st as a good trend date of like all of those New Year's resolutioners coming in. But we also have a few, like a week or so before that January 1st date where everything's probably going to be shut down. Like your calls from your realtor might not be as frequent because they're going to be having Christmas dinner with their family, or off seeing the people that they care about. So I think that 60 days is actually a really good marker now that we're in October. Like that actually is the perfect timeline between now and the end of the year to just like take it slow and steady, and then actually make really effective decisions between now and then to get into those properties. And then from a seller's standpoint, absolutely. Like if you can blow it out of the park with having like the best possible listing out there, oh man, like you're going to do so well because no one else is going to be competing with you. So I absolutely love that.
Yeah, I think it's with sellers, it's okay, maybe it's not a great time, but like you probably won't have much competition there. But what I did say about attracting lowballers, like if you don't give it a good go, then don't be surprised if you get that, because people are going to think that you have motivation because you didn't give it your best bet and maybe you just scrambled to get it on the market. Make sure that you give it a great go. If you give it a great go, I'd feel very confident that you would do well, given what we've seen recently in the market with inventory and whatnot. But don't scramble and put something up that is, a B effort. You need to be giving it an A+.
Yeah, that makes complete sense.
All right. That is all I got for you guys today.
Awesome, Emma. Well, definitely appreciate the context here. And I think it is important to continually follow along with these videos, these market updates, because trends change. Like the numbers change month over month. They, in some markets, have been changing week over week. So I think it is important just to be cognizant, be aware of what's going on, be aware of what time of year we're in, the contextual details of potentially what's happening in the economy. Are things opening up? Do we have, different trends happening? Obviously, the pandemic is a big obvious trend that affects things, but now things are changing still in terms of the regulations, in terms of what's opening up. As Emma said, a lot of people are actually flocking to those areas where they're able to go to concerts, hang out with friends, go out for a meal, and like get that experience that they've been missing for the past 2 years. So these things are really important considerations when you're trying to develop what your next strategy is in terms of a purchase. If it's for you and your family and you're just trying to get the absolute best top bun house, well, you'll probably have a lot more selection in the spring. But if right now you're trying to invest in and maybe find that motivated seller that maybe did kind of like a kind of half effort listing and they need to sell right now, well, you've got an opportunity here. So I definitely really appreciate that, Emma. And as always, it's great having you on the channel. Great chatting.
Yeah,
so
I appreciate it. Yeah, thanks.
Thanks for coming on.